This is the lowest sentiment that I've personally seen on Bitcoin.
Their whole existence is a lie. By definition, everybody who's there is a liar.
I don't think there's anything coming to save Bitcoin.
The first Fed minutes of the Warsh era just dropped, and they leaked the plan. A committee split down the middle, officials blaming AI for inflation, and a chairman quietly building the machinery to swap out the inflation ruler itself, because the system is so buried in debt that lying is easier than fixing the problem. Meanwhile, Lyn Alden, probably the most respected analyst in Bitcoin, says sentiment is the lowest she has personally ever seen. And then she said something that sounds even worse. Nothing is coming to save Bitcoin. No legislation, no reserve, nothing. Today, we look at how these two stories are the same story. And when you put them side by side, the thing that looks doomed and the thing that needs saving trade places. This is Truth Block. I'm Hurley. Let's mine truth. Real quick before we get into it, most of you watching are still not subscribed. If this show helps you keep your head while everybody around you is losing theirs, hit subscribe to Simply Bitcoin. It's free and it helps support the peaceful Bitcoin revolution by putting our content on more feeds. Okay, let's start today with the minutes because this was the first real look inside Kevin Warsh's Fed. Yesterday at 2 p.m. Eastern, they released the record of his first meeting in the chair. And if you read past the headlines, you can watch the system negotiating with itself. Rates were held at 3.5 to 3.75%. 9 of the 18 officials now pencil in a rate hike this year. 9 don't. This is a committee split right down the middle. And buried in the staff's inflation section is a line I never thought I'd read from the Fed. Core goods inflation has risen, and the staff blames, quote, tariffs and AI-related price pressures. So AI is now officially driving inflation up today, while the chairman's whole case for cutting is that AI pulls it down tomorrow. Unless the plan was never about the data. And that's where this gets interesting. Warsh has a problem. The Fed's own gauge, core PCE, reads 3.5%, nearly double the target. He can't cut against that number, and this debt-soaked economy can't survive him hiking. So watch what he's doing instead. He's called core PCE a rough swag. He stood up a task force to go back to, quote, first principles, and how inflation gets measured. And the gauge he keeps praising, the Dallas Fed's trimmed mean, happens to read 2.4% right now. James Lavish broke this down in his Informationist newsletter on Sunday that all of you should be subscribed to. Same country, same prices, same month. Swap the ruler, and a 3.4% problem becomes a 2.4% victory lap. Warsh doesn't need inflation to fall to 2. He just needs the number the Fed quotes to read like 2. Listen to Larry Lepard call the play days before these minutes came out on Mentor Sessions.
You know, I actually think the market kind of has this a little bit wrong. I think he's actually a lot more dovish than we now know, or than he's letting on. I think he's, you know, it's a script that he plays. I mean, if you really think about what the Fed is, I mean, the Fed is just, you know, it's a government division that's put in place to lie to us about inflation and to get us to accept inflation and then to accept the money printing that they have to do to keep the system running. I mean, that's really all the Fed is, and so their whole existence is a lie intrinsically, and by definition, everybody who's there is a liar, and he's just another one. And you know, my view is that he comes in and he emphasizes that they're going to get price stability, and he even bragged in this most recent presentation from Sinter yesterday, Portugal, that the inflation expectations are coming down, and that's because of his tough talk. And I'm just like, come on, dude, stop taking victory laps. I mean, you've been in there fucking 10 days. And, the market thinks he's going to raise rates. And I don't think he's going to raise rates. In fact, I think he's going to cut rates. I think he's foaming the runway to cut rates, with this AI productivity argument. And then his so-called task force is going to come in and tell him that the inflation is overstated and that we should be using the Dallas trimmed median PCI, which is at 2.3 instead of 3 something. And therefore we can, and he's a supply sider, we know that.
That's the whole game in 80 seconds. The Fed doesn't lie because the people inside are evil, although that's also true. It lies because the math leaves no option. Debt grows, so the money supply has to grow to support it, because the interest gets paid with dollars that don't exist yet. They'll find an excuse. AI productivity, a friendlier gauge, but the money gets printed. And this debt addiction runs all the way down. The New York Fed's latest numbers show credit card delinquencies matching 2008 levels, student loans sliding into default, margin debt at records. The government lives on debt, The companies live on debt. The households live on debt. We built a country where the drug is dollars and everybody's a patient. So follow the logic to its end. If the Fed can't hike without breaking the Treasury, can't cut without exposing the lie, and can't fix the debt at all, then what is its actual job? Danny Knowles put a version of that question to James Lavish this week, and the answer took about 10 seconds.
Well, this is a great question. This goes back to first principles. Why does he care about inflation? Why? Why does he care about inflation? Yeah, so some people have to deal with it for a little while. Why do they care about it? First principles. They care about it because his job is to instill confidence in the US dollar. Period.
That's the mandate. The dollar runs on you believing in it, which means everything else, the press conference, the dot plots, the ruler swap, is confidence maintenance. Hold that thought because it's exactly why Lyn's line hits the way it does. But quick reality check first, because all of us still live in a dollar world. Unfortunately, the tax bill and the mortgage still invoice in dollars. The mistake is selling your hardest asset to feed the softest one. That's why I point people to Ledn. You post your Bitcoin as collateral, borrow the dollars you need, and your coins stay in custody the whole time. They never get loaned out to someone else. With Ledn, rates are posted up front. You can pay it back whenever you want, and they've been doing this through every market cycle since 2018, and they've never lost a customer collateral. So if you need dollars but don't want to sell a single sat, check out Ledn at learn.ledn.io/simply. All right, now for the better half of the collision. Lyn Alden sat down with Natalie Burnell on Coin Stories this week. And near the end, Natalie asked her the question half this industry is hanging its hopes on. Does the Clarity Act pass this year? And Lyn's answer went somewhere nobody expected. She reached back to the strategic Bitcoin reserve and pointed out that this market always wants the next thing to save it. Then she closed the door on all of it.
I don't think there's anything coming to save Bitcoin. I think Bitcoin has to kind of, either its merits are going to be seen by the market and it's going to be bought, by players in the market. And they're going to take advantage of, cheap sats and a lot of the fast money washed out and a lot of the parts of the ecosystem deleveraged. And then it'll, climb its way up. And then once it starts climbing its way up, that of course gets outside money interested again. That's what makes it become fast money. If something's, bottomed and rolling up, you get, again, the technical chartists that come in and say, that's actually a pretty good chart. You get the momentum traders, you get the FOMO traders, and you get all the marketing around, Bitcoin one day reclaiming 100K and then reclaiming all-time highs, and it just kind of feeds on itself. And until then, I think the asset just has to survive on its own merits. It's the most liquid way to store and send, permissionless value. It's a strong money in the digital age, and I think those fundamentals are what allows it to make higher highs and higher lows through bear markets. And from what I've seen, I've seen way weaker sentiment this bear market than the 2022 bear market. We were at Pacific Bitcoin in 2022, and energy there was high. Bitcoin was crashing to 16,000. Energy was still very high. I think the combination of the broader crypto space, like truly running out of good narratives, or at least temporary narratives that hit in some way, combined with that this wasn't a very retail heavy cycle, it was more of a corporate cycle. And then kind of the fact that Bitcoin just didn't reach the highs that many people thought, is just disappointing for a lot of people. So this is the lowest sentiment that I've personally seen on Bitcoin.
On first listen, that's the most bearish 2 minutes of the week. The best analyst in the space just told you the cavalry is not coming, and sentiment is the worst she's ever seen. But now run it back against the first half of the episode. The dollar system can't function without a savior. It needs the cuts. Bitcoin has none of that. Nobody can save it, and in 17 years, nothing about it has ever needed saving. It doesn't run on emotional narratives or legislation or a reserve announcement. It runs because it's a censorship-resistant store of value native to the internet, with a supply no government can debase. So when Lyn says the asset has to survive on its own merits, understand what that means. It's the only monetary asset on Earth that can survive and thrive on its own merits. The worst sentiment in history is just what it feels like when the tourists leave, and the merits are all that's left holding the floor. And reality check, they've held it every single time. Which raises the question worth asking yourself. What are you actually holding, and who's holding it for you? If your Bitcoin sits on an exchange, you own an IOU, which is exactly why this episode is brought to you by BitKey. the wallet I personally use, and the one I hand to family when they finally get serious about self-custody. Most wallets assume nothing will ever go wrong. You'll never lose your phone, never make a mistake, never need to pass your stack on. That's not how real life works, and BitKey is built for everything that comes after setup day. With BitKey, there's no seed phrase to lose. The new device has a screen so you can verify what you're approving, and recovery and inheritance are built right in. Download BitKey today at bitkey.world/truth and use promo code TRUTH for 10% off the new BitKey. Okay, the system needs a savior, Bitcoin doesn't, and the market can't tell which is which. That leaves the question every one of you is actually asking. When will this bear market end? I'll be straight with you. Nobody rings the bell at the bottom, and I won't pretend I can. But what I can do is stack the evidence. Start with Lyn Alden from the same interview with Natalie Brunell. Bitcoin is sitting near the bottom of its historic valuation range on multiple metrics. The fast money is out. The coins have been rotating for months into hands that rarely sell. Lyn doesn't do bottom calls, so for her, that's about as loud as it gets. The power law has Bitcoin in deep value territory for only the 4th time in its entire history. The other 3 times were 2015, COVID, and the FTX bottom. And every cycle low Bitcoin has ever printed came in higher than the last. The floor keeps rising because the base of holders of last resort keeps growing. And the last voice on this one is Jordi Visser, because he's earned it. He spent months explaining exactly how the AI trade was draining Bitcoin's liquidity. He was the bear with receipts. Then on July 4th on the Pomp podcast, he laid out his bull case.
The Sharpe ratios are going down, and as we go forward, I'm going to say it again, the AI mid-cycle slowdown is basically the peak and the easy money of AI. And so if the money starts filtering back towards the other direction, I've laid out a pretty bullish case for Bitcoin if you haven't got it. If we're overestimating the inflation side and productivity is coming, if we're overestimating the hawkishness of the Fed from what Warsh said, and at the same time, the AI trade is not going to lose its earnings growth. It's just going to make it more difficult for institutions to stay long it the way they have in the past. Then all of a sudden, the lower volatility of Bitcoin will probably lead in. If we get above the 200-day moving average with everything that I just said, which is up north of 70 at this point, I do think that that's going to be the beginning of the next phase of crypto and the next phase of AI. We'll see if it happens in the second half of the year. I think it will.
So the man who called the drain is describing the refill. I can't give you the date, but the direction is getting real hard to miss. Now, if some part of you agrees this looks like the bottom zone, the worst position to be in is knowing you should hold your own keys and having no clue where to start. That's what the Bitcoin way is for. Real people, one-on-one, walking you through self-custody, privacy, inheritance, even running your own node. Whatever your situation calls for. They will meet you no matter where you are on your Bitcoin journey. Visit thebitcoinway.com/Hurley to claim your free 30-minute consultation today. All right, let's land this plane. 2 monetary systems shared a news cycle this week. One of them is debating which ruler to measure itself with, because the honest number would crack the confidence it runs on. It needs a cut, then a cooler gauge, then a quiet print, then the next bailout, forever, because it's built on debt that can't survive the truth. The other one just sat there around 63,000 with no chairman, no minutes, and no rescue committee, producing a block every 10 minutes, straight through every obituary ever written for it. So Lyn was right. Nothing is coming to save Bitcoin, and nothing has to. One last thing, and longtime viewers know where I stand on this. Bitcoin isn't my savior either. No money is. Money is a tool, and it matters enormously whether the tool is honest, because dishonest scales corrupt everything they touch. But if you're looking for something to save you or give you hope in this broken world, that was never money's job. There's only one savior, and he isn't a monetary asset. I hold Bitcoin because it's true, but I don't worship it. Keep those in the right order, and the volatility loses its grip on you. Okay, here's what I want to know from you in the comments. Do you think the bottom is in, or is one more flush coming? Do you think Warsh will actually swap the inflation ruler? And what will be left of the Fed's credibility if he does? If this episode helped you through the noise, like it, share it with somebody frozen in fear at the bottom, and subscribe to Simply Bitcoin so you don't miss the signal every single day. Thanks for watching, and I'll catch you next week.